Are you filing a tax return right now in 2026 on the behalf of 2025? Well, if you are, and if you happen to be 65 or over, don't forget about the new $6,000 and $12,000 that is now available for you. And that's exactly what I want to point out for you here in this video, so you don't miss out on these thousands and thousands of dollars that are now available, that was signed into law last summer by the president and passed through lawmakers again right around that same time. I also have this screenshot right here, which I will pop up on the screen in just a second. This is right off of the IRS website, so you can see and read for yourself exactly what I'm talking about right here in this video. And again, I want you to take advantage of this because this is a 4-year provision where everybody who is 65 or over can essentially take advantage of this. And I don't want you to miss out on this because this is a lot of money on the table right here, right now. It'll help you save a whole boatload of money as well. And again, it's only around for the next 4 years, and then it completely goes away. So I'm going to discuss the details of this $6,000 and $12,000, who is eligible for it, how to get it, and what are the details you need to know about it. So with that being said, let's pop this up right here, right now. Now, first off, I want to point something out. A lot of people think that this is a check or a payment to you. That is not what this is. It is not a check. It is not a payment to you, okay? There's so many people out there that continue to say, oh, I can't wait to get the $6,000. I can't wait to get the $12,000 check. It's not what that is, okay? Here's what it is. It is a deduction on your federal tax return. And again, this is available for everybody who is 65 or over, as of basically the last day of 2025. So even if your birthday was December 31st, 2025, and you turned 65 on that day, you're eligible for this, okay? However, there is an income threshold of $75,000 as an individual or $150,000 as a married couple. It phases out above those thresholds. However, what is this? It's an extra deduction on your federal tax return to help reduce your taxable income and reduce your tax liability to the federal government, okay? So if you have an income from 2025, which virtually everybody has an income from 2025, right? This will help offset your income to reduce your tax liability to the IRS. Sounds good, right? In other words, less taxes that you need to pay to the IRS and potentially a bigger refund that you could potentially get back because you're reducing your income, okay? Now, what this is, it's $6,000 of a deduction for an individual who has an income under $75,000. Now, as a married couple, it is $12,000 of a deduction, provided the married couple has an income below $150,000 and provided the married couple were both 65 for at least one day in 2025. Even if both of you turn 65 on December 31st of 2025, you would still be eligible for this, okay? You did not need to be 65 for the entire year. All you needed to be 65 was for literally one day in 2025 to be eligible for this. Now, obviously, if you're filing a tax return right here, right now, in 2026, it's on the behalf of 2025. That's what we're doing right now is we're filing our 2025 tax returns. That's what this is all about, okay? So anyway, again, I want to reiterate, and again, I want to make this very, very clear because, again, I see this out there all the time. Oh, it's a check. No, it's not a check. It's a deduction. A big difference between a deduction and a check to you. Okay, now this is just a senior deduction. Everybody has to be 65 or over in order to take advantage of this, okay? Now, another thing that I want to point out with this is that this is above and beyond the standard deduction. As you could see there in the screenshot right off of the IRS website, this is for those people that are taking the standard deduction as well as those individuals that are itemizing as well. So the standard deduction, again, for 2025, just for easy rounding purposes, let's just say it's $15,000. It's actually a little bit more than that, but let's just say $15,000 is the standard deduction for 2025. So for an individual, you get the standard deduction, $15,000, plus the extra $6,000, which is $21,000 of deductions for basically an individual. It's a lot of money to be taken right off the top of your income, okay? Now, as a married couple, obviously, you both get the standard deduction, $15,000, $30,000 total, plus you get the $6,000 a person, $12,000 total. So you could literally have a $42,000 deduction right off the top of your income. That's going to reduce your federal tax liability substantially that you would need to pay in or that you could potentially get back as a refund, more money back in a refund, by the way. Because if you paid taxes throughout the year of 2025, you already paid in. Now that you're going to reconcile all that, when you file your federal tax return, again, you're going to show a lower income. Therefore, whoops, you overpaid in 2025, therefore resulting in a larger refund back to you. Does that kind of make sense? And again, I want to make this very clear. This is not tax advice. This is not accounting advice. This is not legal, professional advice in any way, shape, or form. I am not your CPA. I'm not your accountant. I don't know your exact situation. Everybody's situation is very, very different. This is general information here. Talk to your own accountant, talk to your own CPA, or if you do your taxes on your own, don't forget this, okay? It's going to be right there in your software. Don't forget this one. This is going to be a huge, huge deduction for a lot of people, and this is going to reduce your tax liability probably in a pretty significant way. Now, again, this is not advice. This is not specific to any given person at all, but I want to say this much. Let's just say this. Let's just say, for easy rounding purposes here, let's just say that you're in a 22% tax bracket and you're an individual and a $6,000 deduction. That's worth about $1,200 to you in the form of a refund or less tax liability, okay? $1,200, roughly. Again, I'm rounding here. I'm rounding it. It's actually a little bit more than that. But again, just in a 22% tax bracket, again, the $6,000 would be worth about $1,200 to you. That's $1,200 of free money that you otherwise would have paid to the IRS. Is it better in your possession, or is that money better in the possession of the IRS? Pretty sure it's better in your possession, right? Just saying, okay? I mean, unless you want to pay it to the IRS, then by all means, go ahead and give them your money if you want to, but any smart person probably wouldn't do that. I'm just saying, okay? If you want to, by all means, you can certainly make a charitable donation to the IRS. They'd be very glad to take that. But anyway, point being is that this is the new deduction. Remember, it's only here for 4 years, okay? You can take it in 2026 on the behalf of 2025, or let me say it again. It's here for 2025 tax filing years of 2025, 2026, 2027, 2028, and then it's gone. It's gone after that. It's only a 4-year provision, okay? Anyway, I hope this helps you understand this. And again, I made it very clear. This is not a check. It's a deduction. Huge difference between a check and a deduction. I can't tell you how many times I've seen that out there. People saying, oh, I can't wait for the $6,000 check. No, you're going to be super sad when you find out this is not a check, but rather it's a deduction on your federal tax return. Now, also, I want to clarify this really quickly. For those of you that do not file a tax return, okay, I've seen this comment down below many times over the last, 6 months or whatever since this was signed into law back on the 4th of July of 2025. Number of people are reaching out saying, I don't file a tax return. What does this do for me? The answer is nothing. Absolutely nothing. If you don't file a tax return, you've got no income to deduct. Okay? And again, that's just the truth behind this. This is a deduction of income to help reduce tax liability. So if somebody does not file a tax return, this has no consequence whatsoever for somebody that does not file a tax return, because that means that their income is zero on paper anyway. If somebody has an income that is low enough that they do not file a tax return, their income in the eyes of the government is $0. You've got no income to deduct. Therefore, it has no consequence. It has no value to you, okay? Just being 100% fair with you. Anyway, I hope this helps you. And again, remember, this is just on the federal level. This does not apply to your state, okay? Your state is totally different, but this is just on the federal level. I hope this helps you. As always, drop your comments, your questions, your feedback down below. Do your friends, family, social media a huge favor. Share this video with them. Big share button down below. Share this with them so nobody else misses out on this.